Sellers tighten their grip as every technical indicator screams caution across major timeframes. The 705 unit barrier stands unmoved while momentum oscillators plunge deeper into negative territory. Professional traders systematically exit leveraged positions. The chart reveals what words cannot hide. This content is provided for informational purposes only and should not be considered financial advice. Market conditions can change over time. Shiba Inu commenced February 9th, 2026, trading under relentless technical pressure, defining recent market behavior. According to market data, the asset trades near 610 units after declining 1.26% during the preceding 24-hour window. Price oscillates within a compressed but volatile intraday band spanning approximately 609 to 630 units, illustrating the ongoing confrontation between buyers defending support zones and sellers pushing toward lower levels. Morning sessions witnessed fleeting attempts at holding mid-range territory before intensifying selling pressure systematically dragged valuations back toward the bottom boundary of the trading range. Market participation remained robust despite directional ambiguity, with spot activity generating $21.84 million in futures contracts, recording $86.42 million in volume. The derivatives concentration in total activity suggests institutional participants continue driving short-term price discovery mechanisms rather than retail spot market buyers. Broader timeframe metrics reinforce the prevailing bearish technical environment. Performance tracking confirms Shiba Inu declined 2.53% across one-day measurements, with losses accelerating to 9.28% over the trailing 7-day window. Chart structure analysis revealed multiple resistance barriers obstructing upward price. Movements on February 9th. According to technical assessment, the 20-day simple moving average stationed at 705 units operates as immediate overhead resistance. Establishing a technical ceiling, bulls must penetrate to substantiate sustainable recovery narratives. Bollinger Band architecture illustrated the compressed volatility conditions currently constraining price dynamics. The upper band rests near 847 units, designating a considerably elevated recovery threshold, demanding exceptional buying pressure and volume expansion to attain. This separation between present valuation and upper band resistance demonstrates the magnitude of Shiba Inu's departure from recent equilibrium zones. Downside safeguards appear constrained based on statistical volatility measurements. The lower Bollinger Band settles around 562 units, defining the subsequent support area anchored in price distribution mathematics. Recent trading witnessed bounce attempts precisely beneath this band. Rendering it a psychologically critical level, bulls must preserve to forestall accelerating liquidation cascades. Momentum oscillators uniformly reinforce the bearish technical orientation dominating structural formations. The True Strength Index persisted in deeply negative territory, with readings registering 29.85 on the primary line and 22.46 on the signal line. Both metrics positioning below the zero threshold validated ongoing downward momentum, absent signs of exhaustion or reversal development. Extended timeframe performance measurements illustrated increasingly yet challenging conditions for position holders. According to market metrics, Shiba Inu surrendered 29.48% across the preceding 30-day interval, with depreciation extending to 39.74% throughout the 90-day assessment period. These considerable losses mirrored sustained distribution pressure overwhelming sporadic accumulation efforts throughout the measurement windows. Derivatives positioning exposed professional participants, methodically reducing exposure rather than constructing positions anticipating rebounds. Open interest imploded from the $200 million to $250 million territory, documented during late September 2025, downward to approximately $65.75 million as of February 9th, 2026, according to derivatives tracking platforms. Technical indicator cross-verification revealed the relative strength index positioned at 33.66, dwelling within neutral territory but approaching oversold thresholds beneath 30. Alternative analysis placed RSI at 39, confirming proximity to oversold conditions that historically precede technical rebounds. Support and resistance architecture established critical levels, support zones at 524 units, 486 units, and 414 units, while resistance barriers positioned at 633 units, 705 units, and 742 units. The alignment between multiple technical frameworks validated 705 units as the predominant resistance, demanding penetration for bullish continuation. The technical configuration displays attributes consistent with distribution cycles rather than accumulation formations that precede directional reversals. Bollinger Band examination reveals valuation operating beneath the critical 20-day center line at 705 units, a circumstance that historically favors continued downside exploration until sentiment transforms materially or external triggers materialize. True strength index measurements provide particularly pessimistic insights. Both the primary line at 29.85 and signal component at 22.46 residing in profoundly negative zones indicate momentum advantages sellers across multiple observation periods. Until these oscillators commence trending upward toward the zero reference point, technical participants will sustain defensive positioning rather than initiating aggressive directional exposure. The derivatives deleveraging sequence creates feedback mechanisms that intensify downwards pressure. As open interest contracts from $200 million plus toward $65 million, the reduction in committed capital diminishes the buffer previously absorbing distribution waves. Reduced open interest translates to less available capital for short covering rallies when oversold technical conditions develop. Immediate term price trajectory for Shiba Inu confronts multiple resistance obstacles, creating challenging circumstances for bulls attempting to establish sustainable upward momentum. The 705 unit threshold, representing the 20-day simple moving average, constitutes the proximate technical barrier requiring reclamation. Inability to penetrate above this resistance would probably confine activity within the present 562 to 705 unit band, generating sideways consolidation rather than directional trending characteristics. The bullish recovery framework requires multiple conditions synchronizing simultaneously. Valuation must reclaim 705 units on expanding turnover, signaling authentic accumulation rather than temporary short covering. The true strength index necessitates crossing back above the zero baseline, validating momentum transformation from bearish toward neutral or bullish zones. Derivatives open interest must stabilize and commence expanding, indicating institutional participants regaining confidence in directional conviction. Successfully navigating above 705 units would expose pathways toward the upper Bollinger Band objective at 847 units, representing approximately 38% appreciation from current territory. However, the distance and technical overhead suggest such movements demand extraordinary catalysts beyond conventional market dynamics. The bearish continuation scenario appears more probable, grounded in present technical evidence. Penetration beneath the 562 unit lower Bollinger Band support would expose a February 6th historic minimum at 508 units to retesting. Extended losses approaching the 414 unit zone identified by analysts would mark catastrophic breakdown scenarios. Which technical thresholds are you monitoring for Shiba Inu during the next 7 to 14 day window? Will the 705 unit resistance barrier maintain and enforce another downward leg? Or can bulls assemble sufficient buying pressure to reclaim this critical level and target 847 units? The February 9th technical environment presents predominantly bearish signals throughout momentum indicators, moving average structures, and derivatives positioning frameworks. Whether existing support thresholds maintain or surrender to continued distribution pressure depends entirely on broader market stabilization and sentiment recovery.